Hey guys, welcome to 2026. Exciting to be in a new year and hopefully a better one than last year, but it is an election year, which means we're going to be a little bit topsy-turvy, particularly in the second half. Reserve Bank came out and kept the OCR at 225. That was expected. It was a little more dovish than the market was expecting, with the Reserve Bank, I guess, signalling that they don't really see the OCR increasing until the end of this year and into next year. That's very consistent with our view of the world, which is that, the economy's recovering, but it's a slow recovery. We've still got a reasonable amount of unemployment out there, and the inflation that is coming through things like council rates, which are not controllable. And it would be kind of crazy for the Reserve Bank to start punishing the economy for our council's inability to manage their costs. So I think the Reserve Bank had the right footing there. And so what does that mean in terms of mortgage rates? Mortgage rates should stay largely where they are. Wouldn't expect to see much in the way of increasing mortgage rates, particularly with competition between the banks. That should stay fairly stable. Certainly not expecting rates to fall. Equally not expecting them to increase. So we should be in a period, at least for the next year, of relatively stable mortgage rates before we start to see them increase a little bit further. As they do increase, certainly don't see anything on the horizon that would suggest they're going to spike quickly. Domestically, don't see lots of inflation. Globally, the US is an unusual case in that you could certainly see inflation there. Australia's got some issues around inflation, but in other economies I see the risk of deflation. So I kind of feel that this stuff sort of balances itself out. In terms of house prices, we're seeing a little bit of a gradual recovery. We're seeing confidence come back into the market, both from business and from consumer. That's good for the housing market. We don't have high levels of immigration, if we have any immigration at all, and we don't have much in the way of job growth at the moment that would encourage immigration. So from a housing market perspective, I think you're not going to see house price inflation. Your house prices aren't going to be going up. If we think about that at an aggregate level across the entire market, obviously different things happen in different parts of the market. Certainly Canterbury and South Island, Otago have been behaving differently to Auckland and Wellington. But broadly speaking, house prices won't increase or increase much. The drivers for that aren't there. We've also got a government that is hell-bent on increasing housing supply, holding down land prices, and ensuring that we're getting more competition in things like building supplies. That's going to hold, in my mind, house prices reasonably static for the foreseeable future. You will ultimately get low levels of house price inflation going through, but just don't expect in the next cycle to see the sort of increases in house prices we've seen in previous cycles. It isn't going to happen. Something that's more realistic for me would be something in the 3 to 4% increases per year, not the sort of 7 to 8s that maybe we've got conditioned to in previous cycles. The big unknown for us is what's happening globally. I think the New Zealand is into a gradual recovery. It's going to be slow and steady, and probably a good recovery in that it's built off fundamentals. But the big unknown for us is what's happening around the rest of the world. I don't need to labour the point on that. You know what's going on, particularly in America. I guess the risk for us is some sort of US default. We've seen the US currency starting to come off the boil a bit, which means that holidays to America are getting a little bit cheaper. But America still looks horrendously expensive. We just have no idea what's going to happen over there. I think if I was to put some perspective on that, New Zealand, we produce food. Fundamentally, it's a need, it's not a want, which to me means that, look, if some sort of macro event occurs at a global level, if America sneezes, we all catch a cold, but I don't think the cold would be that bad. I think we've seen a degree of resilience in our economy. Plus, we've got a lot going on overseas in terms of a free trade agreement with India, which I think is a big positive. It was our trade relationship with China through the GFC that I think insulated New Zealand. I think opportunities like India and stuff provide us with a level of resilience that a good thing. Hey, look, that's it from me. I think we're into a gradual recovery, nothing too exciting. There's some risk offshore, and at some point that risk manifests itself, but I kind of feel that we've built up a pretty resilient economy in the past 4 or 5 years that will see us through anything that happens.